This is a Stock Trading Reality Podcast, episode 123.
Revenge trading. I'm like, oh, I lost $1,000 yesterday. I'll get that back today, plus another, and plus I'll make $1,000. So
this is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success, who can't stand the words slaw and guac. Just say the whole word. Play trader.
Yeah, I don't know. Maybe I'm a total weirdo, but the words slaw and guac drive me insane. I think it's more so just the concept of not saying an entire name. Like, probably. Don't give me this prob. Yeah, probably. So, but yeah, the biggest ones, I think maybe it's just the way they sound, but slaw, no, just say coleslaw. Or guac, no, just say guacamole, okay? Don't give me this. Can I have a chip with some guac on it? I can't stand it. I know that makes me probably just like an obsessive compulsive weirdo, but I don't know. It is what it is. Ches, you actually heard me rant about this on one of the past live webinars that I do as a part of the university program. But what is your opinion on does slaw, does guac, does any of that stuff bother you, or are you just like whatever?
I'm going to go put on some trays in the mark. Would you like if I said that instead of trading in the market?
Yeah, that's just unacceptable.
So yes, I did hear your live rant, and it was a pretty epic one. However, I actually have no problem with anybody who says guac.
Just hearing you say that drives me insane.
I mean, I don't mind it because I think some people just butcher saying it in the sense. I think a lot of people might even just abbreviate it because I don't think it's the easiest word to pronounce. I don't know. Maybe that's just me. But I have no problem with it, Clay. You're actually acting like an older man, and usually I'm the old one on this podcast. But yeah, this is the equivalent of telling the kids to get off the lawn. But yeah, it seems like it's a personal one for you.
Yeah, and I'm envious of you. I really wish that to hear those words, it would just be like any other word. But I don't know what it is. It's just, if there are any clinical, I don't know if I want to open up this can of worms. If there's any like clinically certified, degreed psychoanalysts that listen to this thing, please in the comment section. Why does that bother me so much? If you have an opinion. Now we're going to get all these YouTube degreed people, I have a feeling, giving me, but it's okay. So I don't know. But if you have an opinion on why that's the case, a scientific reason, I'd love to hear it. But moving on, because I could rant on this for much longer than what I have. But moving on, we have a awesome guest today. And as he disclosed later on in the interview, we'd asked him a couple previous times. And the freaking guy, oh, my story's not that good. Ches, was that not like the worst excuse ever after we heard like even the opening part of his story? That was like terrible.
I mean, it was just the opening part of the story, too. And he goes, I don't know if my story's really worthy for a podcast. And we're scratching our heads after he tells the story. Like, are you kidding me? This is a great story.
Yeah, exactly. So it proves our point, though, Ches, that usually the people that try to throw that excuse in our face, oh, my story's not that good, they're the ones that have like the most interesting stories. But regardless, we are talking to Mark today. For those of you that hang out in the chat room and are part of the community, he goes by hyprsnpr, but he spells it kind of weird. But if you look in the show notes, you will have it spelled out for you there. But you should probably recognize it because he hangs out quite a bit. But he's going to share our story. And yeah, it is an up and down story. I didn't realize he was been in the market for as long as he has, but he's got over a couple of decades of experience in the market. So lots of good stuff to talk about. We go off on some good rabbit holes in terms of psychology and things to consider. And we come up with a new rule at the end called the Mark III. So we'll get to that at the end. But definitely a great interview, one that turned out very well, that I'm pleased with, and something where, if you give it a chance and listen through it all, I'm extremely confident that there's going to be some nuggets of wisdom from Mark's experience that you can learn from. So with that, let's get to it. Mark, welcome to the show.
Hey, thanks, Clay. Glad to be here.
Yeah, and this is not our first time chatting. This is our first time actually chatting over the internet. Our first time chatting was face-to-face. Mark came to the Columbus, Ohio meet and greet, which at the time of this recording was about 6 weeks ago. Ches was there too, so we have all hung out in person. So if anything, this is kind of like anticlimactic to go from person to now just, talking over the internet. But Mark, was the meet and greet, was that a pretty good time?
Yeah, it was a blast, actually. Can't wait for the next one. And as you know, I brought my fiance to that one, and I was really nervous that she was going to be super bored, but she actually had a good time as well. So.
Yeah, I was going to say, that was like my wife sat next to Nina, right? Is that her name?
Good job.
Okay,
yeah.
That's what I thought. She sat next to Nina. And my wife, Abby, had nothing but good things to say and enjoyed her evening, and definitely demanded of me to keep her up to date with all the wedding planning and stuff like that. So I guess her and Nina talked wedding stuff. And so, Mark, you got to keep me up to date or else I'm going to get in trouble with my wife. So can you do that for me?
What color are the napkins,
Yeah, no
Mark?
problem. Well, actually, don't know colors yet, although I think they're going to be gray and purple. But we do have a date. The date is June 2nd of 2018. So, but that's about all we got figured out for now.
Okay, June 2nd. 28, got it. I will report that back to Abby. But so it was a great time, and it's kind of crazy, Chuz, to think back to Baltimore, which is our first meet and greet, where it was just a bunch of guys showed up, and now it has evolved to the point where people are bringing fiancés and girlfriends. Heck, I even brought my wife to this one, so things have evolved quite a bit since Baltimore, wouldn't you say, Chuz?
They're getting pretty serious if you bring your wife to them, so yeah, I would say.
It is. If anything, I guess that just shows that I finally feel comfortable enough that nobody's going to drag us off behind into a dark alley and murder us. That everybody so far has been very normal, except for the Canadians that always show up. Besides the Canadians, though, everybody's been normal.
We're finally away from worrying about getting shivved at these events, so yes, that's good.
Yeah, exactly.
That is good.
Yeah. So, but we got it. Let's get to you, Mark. But so where did all this start for you? Where did you hear about the markets? What got you interested enough to kind of wanted to start to get involved into them?
Yeah, so I guess my beginning stories is a little awkward, I guess. So, and the reason I say that is I lived with a roommate at the time, whose dad was very affluent in the real estate markets, and then who started to dabble in the stock market. And so what I learned back in the day, which I was probably 21 years old at the time, was through them and really his dad. And what he went and spent a bunch of money, literally like $50,000 for a weekend long course to teach him all about covered calls, and that was the only thing it taught. So I learned
for $50,000.
Yeah.
Holy smokes.
Prices are going up. You've heard it here first. Clay Trader University is now $75,000 and will teach you even how to do more than covered calls.
Yeah. So I learned very little from them, just kind of eavesdropping on them talking and being a little bit a part of the conversation, but I didn't do the same education as them. But honestly, I killed it for about a year and a half. I was doing nothing but covered calls. But this is how little I knew. So back in covered calls, I thought you literally had to wait for the option to expire. So I figured, once I bought the option, I sat in it until it expired. I figured I thought there was no way out unless somebody exercised it on me, or until it expired. So that's how little I knew. So sometimes I'd be sitting in these. I would try to usually do no more than a month out, but I'd be sitting in these for about a month to 2 months. But I was averaging probably $400 or $500 a month. Which I thought at the time, being in my early 20s, not making a whole lot of money yet, was excellent. And all of a sudden, I'll back up a little bit too. So the other bad part of what I was doing, since I knew nothing, I was putting all my eggs in the basket every time. So, and I was trading full margin. So I had about $8,000 of my own money in it, plus trading margin. So I was invested in this company. I don't even remember what it's called anymore, but it came out overnight that their executives were keeping the stock price inflated. So overnight it went from like $17 a share to like 2 cents. So I literally lost everything. Plus I had a giant margin call to deal with.
Ouch. I mean, that's a heck of a story, because most of the time...
I did not know that about you. That you did not share that with me at...
No.
No, that's crazy. Well, thank you for sharing, first off. Sorry to cut you off, Chaz, but and I'll let you run with it. But yeah, I think we can both be appreciative of the public honesty and just to disclose that. That's Yeah, thank you for that.
Yeah, I mean, this was when I was really young. So, I mean, this was about, 18, 17 years ago. So, I've since have long recovered since then, but I didn't dabble in the markets after that for quite some time, and I swore off margin and all that fun stuff. So, since then, I've after your education and being part of your community, I have since, kind of opened my eyes again and, use margin wisely and make a little more informed trades.
Now, obviously, that happened, you said, like a long time ago, and, you're in your 20s, it's okay, you still have plenty of time to bounce back. I have to ask this question, though. How bad was the margin call that you needed to pretty much fulfill for your broker? And then secondly, how long of a break did you take after the market? Because I feel like
years.
If that happened to me, okay, so years. I was going to say, I personally would be like, wow, this thing is rigged, this is nonsense, and I'm just not even going to mess with it. So, okay, so years.
Yeah, I would say I took probably around a 6 or 7 year hiatus from the markets where I just didn't even think about them.
So let's talk more about we're going to try to podcast through fear here, try to scare respect into people. So you made the comment you had to deal with the margin. Explain a little bit more about what that means, because to a newer listener, they may not really understand what you just said, but you were in a very sticky situation. Could you assign a few general numbers to things?
Yeah, for sure. The margin call, since I was buying on margin to maximize my profit, because that's the only way I really understood it at the time. I had about $8,000 of my own money in. At the time of the margin call, I think I owed, because a margin. So for margin, for people who don't understand, you're basically taking a loan from your broker. So when the value of that stock went to nothing, they still wanted their money, and I basically had to come up with about $6,000 in a matter of 2 days. That was all the time they gave me to come up with the money.
And where did that $6,000 come from?
Everywhere and anywhere I could get it. I barely scraped it together, but luckily it all came from my accounts. I didn't have to go to any family members or anything to ask for money.
But I mean, so for you listeners, that's how nasty things can get. Is you're oh, poor guy, he lost all $8,000. True. But then, as he just said, and I'm not laughing I'm just laughing at you just because of how nasty it was. So yes, he lost $8,000. Plus, he still owed another $6,000, which, he had to scrape it together from, it sounds like, every which way. So the moral, if you're saying, holy crap, that sounds kind of scary. Yeah, margin is scary. And especially now, it's a tool to be used. And it sounds like we'll hear how Mark has brought it back into a strategy. But if you're brand new, it can sound great, but remember, I perfectly said, Mark, it is the loan that your broker is giving you, and if you burn that loan, your broker is not going to sit there and care. They're going to say, "Give us our money back." So
exactly.
Wow, that's messed up, man, in a good way. So thank you again for sharing. If that doesn't scare people as newer traders to respect margin or just respect the process of learning how to trade properly, then I guess they just deserve to lose their money, because I don't know if it really gets any more scarier or realer than that. So you were literally out of the markets for years and years. I mean, did you ever check back in during this time, or is it almost just like cold turkey? I don't even want to think about the markets.
It was literally cold turkey. I didn't even want to think about it. But then years later, none of my friends really got into it. I've just always kind of had an underlying passion for it. So basically after enough time went by and I was able to save enough money, again, to where, if I lost it, it wasn't going to kill me. I started to dabble again. My very first purchase back into it was, Sirius satellite radio, actually, when Howard Stern, moved over. Probably about a couple years after that, their stock prices went down to like 4 or 5 cents. But of course, I didn't get back in at that low. I wish I would have. I bought it somewhere around $1 something, and then rode it all the way down to when it was like 5 cents, and then rode it all the way back up to when it hit $3 and sold. So actually, that ended up working out for me. But I was in that trade for years.
Okay, so obviously it's different, in my opinion, if it's something that's that long, kind of term, would you say that was more of an investment based on something underlying? Like that's what you had thought about serious? Or was this actually based on any technicals? Or was this based on any kind of training you had gotten from your friend's dad?
No.
Or was this just more so the underlying factor is you think it's going to go down and you think it's going to go up, and that was why you put those trades on?
Yeah, so the reason I did those trades, I thought it was going to go back up. So I thought, oh man, they got Howard Stern, they're getting subscribers. This thing's going to go to the moon, is what I thought. I was like, there's no way. So I thought there was no way that it's going to stay here at $1. Whatever it was that I bought in at, I thought it was just going to go up from there. And then of course, I watched it fall all the way down to 5 cents with me still owning it because I'm, I was retarded. So I was like, well, that money's gone. But then luckily that thing ended up turning back around and ended up bailing me out and making me a decent amount of money as well. So
just to circle back, maybe I missed it, but when you started to save up money.
Yeah.
Were you saving up money specifically for trading and investing, or if so, or I guess what was the point of saving up money? Was that just general savings?
Yeah,
or
just
were you
general
always
savings, and then taking a portion out of that for trading.
Okay, so did you always know that you're going to take a portion out for trading?
No, I didn't. I knew I was always going to take a portion out to do something, whether that was going to be real estate or investing or starting my own business, whatever. I was definitely allocating that money for something. I just didn't know what.
So, okay, perfect. So what defined the something as trading then? What did something happen? But how did that outcome finally determine that, that line item in my budget is actually going to be, I'm deleting out of the sell something, and now I'm going to put in trading. What actually made that happen?
Sure. Actually, the Sirius stock. So when I made money in that one, and I did all right. I mean, I didn't make back all my money that I lost previously, but I did okay. Now I sat in the trade for years, but it got me interested again. I was like, oh yeah. I mean, I was like, man, if I actually knew what I was doing, I could definitely, if I could have bought in this thing when it was like 5 cents, and I could have quintupled my money, and so it got me interested and knew. So I started, watching YouTube videos and getting on Stock Twix, Twits. Sorry, I can't pronounce it apparently. And just started, just reading as much as I could. I still didn't do very many trades. I maybe averaged a couple trades a year. And it was always long-term stuff, thinking, and really not putting any intelligent thought into it, just because of all the free information I could find out there. Really wasn't worth all that much. I was basically shadow trading off of, opinions and stuff I found on Stock Twits and other things like that. And I really wasn't getting anywhere. So fast forwarding a little bit, a few years ago, I always saw your videos being posted, and I really liked the way you taught, at least in those little videos, snippets, as far as, basically just standard supports and resistances. And I'm like, man, I really like this guy. So that's when I signed up for your chat room, and I kind of just sat in there, didn't talk for a while. And then I saw saw everybody in there talking all this stuff that honestly was Greek to me. Like, I didn't even understand half the words you all were using. But then I had enough foresight to kind of sign up for your service. And I'm glad I did.
And now, obviously, he's made $8 million, Clay, so it's definitely wiped out the loss. But
yeah, no problem.
No, actually,
but I want to hear.
Oh yeah, go ahead.
I was just gonna say, I want to hear kind of about the process, because I always find it fascinating. So, did you go through the courses very quickly with an intention to kind of get into the market fast, or did you kind of take your time going through the courses at paper trade and kind of do things in a more slower pace? Because what I usually find when I ask people this is some people are on the very fast side, and other people are understand that this is going to take time and will take a slower approach.
So I went through the courses extremely fast, but it was not with the intention to get into the market fast. So at the time I was single. I really had nothing else to do at night or on the weekend. So I literally bought Clay's courses on a Friday night, and I probably went through Robotic Trading 2.0, and one other course all in that first weekend. and then I kind of paper traded things for a little while. And my first real live trade, I think I did maybe 2 or 3 weeks after I finished the robotic trading stuff from that first weekend, and I made enough to pay for Clay's course. My first trade, I made $1,600.
Nice. Now, you've been around a while, so I'm trying to think. When you were buying courses, did Clay Trader University even exist?
Yes, it did. It did.
It did exist.
It was for that, and it was for the $1,500 price tag, I believe.
Oh yeah, so you got it before prices, before I raised. So well done to you. So was RVR trading, was that part of the university then, or no?
It was, but I had not taken that yet at the time that I had made my first live trade. Now with that first trade that I made, I was very excited about it, but I was still really cautious. So I didn't start trading like 3 times a day or anything like that. I think a week went by before I made my next trade.
Okay. Let me ask this though, just because there's some good psychology going on here. So you have access to all these courses, and when you get to university, okay, watch this, and then you watch this, and you watch this, and part of that is you got to watch RVR trading. Yet here you are trading with real money before you have even gone through the entire university. So why? What was going on in your mind that justified? I mean, to me, make the analogy, you are going to school to become a coder, and you're learning all these programming languages, but you're like, you know what? I'm done. I'm going to go form this app right now. Sure, maybe you get a few lines of the app right, but I don't know, that wouldn't make sense. So what in your mind made sense about not having taken all the training, yet here you are putting your real money out on the line?
Probably a little bit of cockiness. I mean, I'm just going to be straight up. Because I saw all you guys in the room. I started to actually understand you guys in the room, and somebody alerted something, and it was like fresh like the setup was like fresh off to something that I just like studied. And I'm like, I've got this. And it turns out that I did, but exactly like you said, though, it could easily turn around, and I could have lost a lot. So.
Yep. And I was the same way in the sense of I flew through the courses, and then I just pretty much jumped into trading live because I was just excited about trading and wanted to put my newfound knowledge to use. But obviously, you said it worked out, so that's good. But so here's something else that I always kind of find interesting and how people kind of deal with it. Did you have kind of immediate success right away, or did you go into a period where you possibly, had a drawdown, you had 3, 4, 5 losing trades in a row and start to question if you actually knew what you were doing? Did you ever have anything like that, or has it been relatively smooth sailing for you?
No, definitely not smooth sailing. So I disappeared probably from you guys about a year or so ago, and it was I remember that. It was honestly because I went through a struggle. So when I first signed up and started trading with live money, and gone through all the courses, including RVR. I was killing it. I was keeping track of everything. I had like a 88% win ratio. I had made $7,000 in a matter of like 2 months, which for me was just amazing. Like I was on cloud 9.
I would argue for anybody. I mean, if somebody's not happy with $7,000 for 2 months, because you were still working a full-time job, right?
Yeah, sure was. Yeah.
Yeah, so an extra $7,000 in 2 months with a full-time job, I'd say that was pretty darn good.
Right. So, but then what happened after that, I don't know. I still don't really know exactly what happened because, like, I was analyzing trades, but I don't know if I was analyzing with goggles on or what. But I got too cocky or something. I do know one thing that I was doing though that was too bad. Was I was definitely going larger. So since I did have all the success, and what I mean by going larger, instead of where I was doing 2, 3, 4, 5 contracts on options, or 2 or 3, 4, 500s in shares, I was now all of a sudden going 10, 20, 30, 40, 50 contracts, which was not my normal trading style. But I lost everything. That $7,000, I lost all that entire $7,000 in a month. My win ratio went down to like 20% from the 88%. So it was spiraling out of control. So I lost that $7,000 plus like another $4,000 or so, and then I just halted the brakes on everything and went back to kind of paper trading, disappeared from the website. Just kind of put it in the back of my mind for a little bit, kind of retook some of the Clay's classes, took a little bit more of a slower approach to it. And here recently is when I kind of started trading full-time again. So
let me just, because you don't know what happened. Did you hear what he said, Ches, that got him? I was waiting for it, and it sure reared its ugly head.
Yep, it definitely showed its face.
Yeah, so you increased your size. So my guess, if I had to think what exactly happened, props to you. Cockiness is kind of an underlying theme here. So, but that's good. You're self-aware, and self-aware is 90% of the battle. So it sounds. My guess would be, in hindsight, cockiness led to increasing position size way too quickly than what you should have. And then you had all these mind games going on, because it just doesn't make any other sense how your win rate could drop all of a sudden, and just everything to fall off the cliff, if you will, when things were going so well. But position size, that gets you every time, doesn't it, Ches?
Yeah, it certainly does, and when things are going great, sure, you're making a lot of money, but in the same time, if you're not taking your portfolio risk into consideration, and how much you're actually risking per trade, that like you said, going from an 80% win rate down to the 20s can absolutely destroy you if your risk management isn't tight on that.
Right. And there, yeah, and 80 to 20, that's not like marginal, that's like insane. So there's something that totally threw off your mental psyche. And yeah, that's what position size is going to be when you are risking more. And we talk about this all the time. That's going to bring in new voices that you didn't even know existed. And looking back, those probably got the best of you. But it is what it is at that point. But again, thank you for your honesty and just transparency. That's a great learning example of, just because things are going great, if you increase position size too rapidly, that can really cause the wheels to fall off the proverbial profit machine.
Oh, for sure. And I still struggle with this a little bit too. Definitely the whole, when it was kind of spiraling downward, I was trying to revenge trading. Like, I lost $1,000 yesterday. I'll get that back today, plus another, and plus I'll make $1,000. So then I'm like going even larger on position size to try to get it back. And,
yep, that's what it was then. Yeah. So the first increase in position size was just the first domino, but now hearing that revenge trading by increasing even bigger, that's definitely what causes the water to spin around in the toilet as it sucks your money down. So there we go. That's exactly what happened, Mark. Talking it out without question. Ches, would you agree with my diagnosis here?
I would completely agree with your prognosis, Doctor.
Okay, I mean, it's, increasing size and then revenge trading, so I increased size that much more to get it back, plus some.
Yeah, because, I could get it back, Clay. I knew what I was doing.
Yeah, the human mind, fascinating. So anyways, you disappeared. Glad to hear that you... Well, did you ever disappear from the market itself, or just from the site and the chat room, or were you always involved? Because previously, as we've learned, you literally just stepped away from the market cold turkey. Was this another cold turkey thing, or were you still kind of keeping your toe dipped in the water a little bit?
It was cold turkey for about a month, and then I definitely was involved from a paper trading standpoint and just kind of watching it overall. But yeah, I made no trades for probably at least a year or so.
And I guess what led you to come back? Was it just you were feeling confident in your paper trading now at this point? Kind of the recollection of the destruction that had happened kind of passed? Because I always find it fascinating, because most people, a lot of people don't find success immediately when trading, and some people might just say, well, trading's not for me, and give up on it. But those who are passionate always end up coming back. So, what brought you back again?
I am definitely passionate, but at the same time, I knew that the money lost was my own fault, and just a lack of education and discipline. And I know I have it in me to master it, and I will. So, and honestly, at the end of the day, though, it's just true passion. It's just something I do. No matter how much I'm working through the week, I always find time to look at the markets, do some research, read on some things, check out a course from Clay or whatever it is. So it's just, I consider it a hobby that I love.
Nice. Well said. So your paper trading and your paper trading results, I'm assuming, were were pretty good, or what exactly were you looking for in your paper trading? After the snafu that happened, you were paper trading, like you said. Yeah, that's kind of you're keeping your toe dipped in the water. Were you looking for anything paper trading, or walk us through what exactly transpired through the paper trading process that you had put into place for yourself?
Sure. Yeah. So with the paper trading process, I was looking for that consistency again, and it's definitely easier when you don't have real money on the line. I realize that, but I just wanted to make sure my strategy started to pan out again. And I could go back to that 88% win ratio, and I could practice good RVR. So when things did go against me, I wasn't losing thousands of dollars in a single day. And I was able to do that paper trading. Now, don't get me wrong, I wasn't able to do that overnight. It took me, and I still work on it, honestly, but it took me several months. So when I started to say I really wanted to give this a go again, to kind of perfect everything and line everything back up again the way I like it, and kind of figure out the way the RVR needs to be for me, and just what's going on. Now, I still have my down days or whatever, but I have far more green days now than I do red. So, and I'm trying to keep it that way.
Now, for listeners that maybe I just missed it, what time frame do you actually trade? Are you just trading short-term intraday, or are you swing trading? What exactly are you trading?
Yeah, I know this is going to sound weird since I do work a 9-to-5 job, but yeah, I just intraday trade because so with my day job, I do have the luxury of being at my desk most of the hours of the day. There are times I do need to go away for meetings or whatnot, but when I'm at my desk, I keep my broker's app open in one monitor. I have a 3-monitor system, and I'll just kind of check some of the major stocks or something that you guys might be alerting in the room. And if I got time, I'll explore it and kind of see if it's a setup that I like. And if it is, then I might make a quick trade. And if it's not, then I don't trade at all. So like today, I only made $85 just because I just made a couple quick trades. I had to run to a meeting and I got out of them. I didn't even stay in them to see what they would do, just because I don't like to do a stop and then walk away. I like to kind of to walk the stop up and all that stuff. So
nice.
Yeah.
Let me ask this, just because I want to backtrack a tad, because you're certainly not alone in real money. Now I need to paper trade back to real money. But when you're getting back into real money after having paper traded for several months, how did you approach that? Did you go very slowly? Did you just jump full bore? Were you nervous? Kind of walk us through those initial first couple of trades after literally several months of just paper trading, and then you're transitioning back to real money. Walk us through kind of that little part, because obviously, yeah, right now you're doing very well, but you kind of skipped over a big part, at least in my mind, which is that transition from paper trading back into real money. So walk us through that part of the journey.
Yeah, we'll do. Yeah, sorry about that too. So yeah,
no, it's fine. I just,
yeah.
We'll blame Martha.
When I got back into things, yeah, I definitely took it real slow. And what I mean by that, I mostly trade options during the day or intraday. I like to trade Tesla, and at the time Apple when I was getting back into it. And so I was just checking those a lot, and I would literally buy like a call or a put, and that's it. Now, occasionally, if there was a setup I liked in a underlying security that was alerted in the room, I would buy literally no more than 100 shares and just go with that and see what it did for me. So I was not going extreme size at all. My comfort zone, though, like when I paper trade, is generally around 5 contracts or around 500 shares. And I don't really like to go above that.
Gotcha. And what I really hope people take away from this is that when he was practicing, and I'm saying this because we have a recent case in the chat room, I'm not going to name any names though, but somebody in the chat room is going to trade 1 contract for futures, but they're paper trading with 10. And I told him right away, you're setting yourself up for failure because you're going to see these big gains, and when your 1 contract is 1/10 of that size, that greed is going to rear its ugly head. So I'm very, very, very happy to hear that you kind of were trading the actual size that you will be when you kind of came back. So in my opinion, that's such a key thing that not a lot of people think of. They think, oh, I'll just trade a multiple of whatever size I'm going to trade. I promise you, you're doing yourself a disservice. So I think it's very smart that you did it that way.
Yeah, and honestly, that was the lessons learned. So that's what I did this time. Now, originally, when I first started paper trading, I paper traded once before I even heard about Clay Trader, and I was extremely not even close to trading realistically. So the virtual account gave me like $100,000, and of course, I was going all in $100,000 on every trade for everything. So when it won, I did awesome. I'm like, oh, I'm a genius. I can do this with real money. Well, it doesn't really work that way. But yes, I learned to treat the paper trading like you would realistically, just because exactly like what you just said, Ches, the greed creeps in, because when I had traded before and using the unrealistic sizes and went with real money, the greed absolutely kicked in. I'm like, why am I not making the $20,000 the paper trading said I could make?
Yeah, it's always I don't have. I'm sort of making this up in the sense of I don't have stats, but I swear at least once or twice a week. Yeah, Clay. So I made like 80 grand in my virtual account. I made $50,000 in a week on this, and what is it, Stock Wars or something like, I don't know, one of these apps out there, and I'm just you just gotta take a deep breath and then explain to this person what we just talked about. So yeah, if you're out there listening and you're doing some virtual account and you have all these massive gains, that's just not really how things unfold. And I mean, don't get me wrong, it's great that it's making you passionate and interested in the markets, but when it goes to the reality of things, it's that beautiful woman you've been making out with is actually just a pig with lipstick on it. So you got to just keep things definitely in perspective. So, good. So that was a very good transition. You did it right. You started slow. You just worked your way up. But I guess why options? Why? How did you land on options? Was it because all the way back to your covered call days, or what ultimately has you? It sounds like, correct me if I'm wrong, but mainly just trading options as opposed to many of the other vehicles available out there.
Correct. Yeah, I still have to take the advanced options course. My day jobs have been pretty busy here, so I haven't had a whole lot of opportunity to sit down and do that. But I do want to use additional options vehicles. But yes, right now I've just been going long on either puts or calls. Mainly puts, though. I do like the downside. But the reason I like options so much, honestly, is just an RVR standpoint. So I can buy essentially 100 shares of the underlying stock for pennies on the dollar. So if it does go completely against me, I'm not out my entire account. I can use a smaller amount, and I'm making a bigger return. So I can make 20% and risk much less of my account versus making 2% and risking a good portion of my account. So that's what got me initially attracted to them. And now I've just traded them so frequently, I'm just kind of used to them. To me, it's just another stock. So I don't know. Don't know if I'm doing a good job answering your question.
That was perfectly answered. The way you summarized the risk with the math behind it was, well said. And would you agree, Ches? Did that all make sense to you?
Yeah, absolutely. And I think, especially on the simplified side, as simple as buying calls and puts, you can actually do a ton of stuff to manage your risk pretty much from the onset, very similar to how I set my risk with advanced options. I just think options are a really cool vehicle, especially for those that are risk conscious. Don't get me wrong, if you're buying these nasty, cheap things that have a 95% of not making it to target, then obviously, you threw a gamble. That's fine, as long as you know that and your loss is capped very low. But no, you can definitely trade options extremely logically to keep your risk extremely small, and the upside really is pretty much depending on what it is, a call or a put, but relatively high compared to what you put into it.
Yeah, well explained, Ches. I'm very curious for this one because people, and I'm probably speaking for the majority of traders, cockiness, confidence, that's what blurs this line. But sounds like back in the day, especially after Siri, you went through that big swing, and sure, it worked out for you. But, mentally speaking, how did you used to kind of view losses, being wrong versus now, how do you view, oh, crap, I was wrong? I mean, do you still struggle admitting you're wrong, taking losses? But kind of walk us through the kind of the two marks. The mark back in the series day where you, like I said, you held through that big swing, and now the mark right now that's doing very well.
Sure. Yeah. So, the mark that held through like the big swing, pretty much every day I would just be like, this stock's stupid, like it's got to come back around, and then it would just go further down, and then I'd be like, the market's totally rigged, like what is going on here, like literally just live inside my head for however long it was down, and then and then I'd have the voices creeping in saying, I'll just put more money in, that way when it turns around tomorrow you'll be up, and you won't be red anymore, and you'll just make that much more money. And then,
but you learned that lesson already.
Yes, I did.
Wait, so you averaged down on series 2?
No, I actually did not.
Oh, okay.
But those voices did creep in every day, like literally every day. Like when it was 5 cents, like I literally had the order typed in, and honestly, in hindsight, I should have did this.
Right, hindsight, yes.
I had the order typed in for $1,000, how many shares that would have bought me then. But a coworker talked me out of it. He's like, dude, they're probably going to file bankruptcy this week. Like, you don't want to just waste another $1,000. I was like, yeah, you're right. Now, in hindsight, I would have made a crap ton of money if I would have held up all the way up to $3. But no, I mean, his logic was completely sound, and I made the right decision by not trying to average down.
Yes, I was going to say, I was giving you enough rope to see if you'd hang yourself by throwing your coworker under the bus, but actually, you hung me. You gave him, that logic was fantastic, and he apparently understands that it's all about good habits in the long run, not just, gambling and having things magically work out in your favor. So, at this point, I mean, you don't need to give me like exact numbers, but I like your style in the chat room because you just post whatever, and even if you have losing trades, you'll still post them. But I've been seeing some pretty big wins. So are all these wins, are they coming from intraday, which I know you said you're mainly trading, or are you doing any swing trading at all? Walk us through some of, if you can think of one off the top of your head, how exactly are these all coming to fruition?
Yeah, sure, no problem. So it's basically all intraday. I've held a couple things overnight, so across a couple days. I literally won't hold longer than 2 days for the most part. Even holding over one night really bothers me. I think about it all night long. So I don't do it willingly. I only do it like if I see the chart really saying, hey, it kind of makes sense to hold. So basically everything's coming from intraday. A lot of options. I will do equities like you probably saw yesterday where I did, what is that, CRYS or whatever heck that was, CLYS maybe.
Yep.
I traded that one. So that wasn't an option, but it was an equity. I literally like being in a stock literally minutes to maybe, half an hour to an hour. If I'm in it longer than that, I usually just go ahead and mark it out and say it's not doing what I want, and, I move on to the next trade.
That's actually a really good point, too, because there's some people who say time stops are stupid, and there's other people who say, time stops are extremely imperative. And Clay, I want you to weigh in on this, because especially the way you trade, Clay, you actually have a time stop. It might not be a set amount of minutes, but if a trade kind of fills you and doesn't act the way you want to, you're willing to kind of wiggle your way out of it and just get out and be done with it. Because in your opinion, and I want to hear your response to this, you want the trade pretty much to work from the onset, because if it doesn't, obviously you have risk management in place, but there's something wrong, something in your analysis, or just the market doesn't care about that level or whatever it was. Instead of just sitting around in the chop, Mark's willing to just say, nope, this isn't doing what I want, I'm going to close this, and that's that.
Yeah, that's actually, I guess I do when I really stop and think about it, subconsciously somewhere, because you're right, Ches. It's not like, okay,
it's
and
not like
I get in the trade
6
and
minutes,
I hit,
you don't set a timer,
Yeah, exactly. I do not trade with a stopwatch, and as soon as I get filled, I hit the stop. But yeah, this is what myself and Nate Wilson have talked about for the Clay Trader University members in the webinars. And this is kind of where feel comes into play. And how do you define feel? Well, I don't know. You can't assign a numerical value to it. But yeah, there is definitely a time stop where you're just like, you know what? I've given you enough time to act the way I think you should want to act, and I want you to act, and you're not. So I'm either going to, implement the next phase of the plan, or I'm just going to hop totally out. And so, yeah, I would say, Ches, to your point, that is more than a fair assessment that I certainly have time stops in my strategy. And there's nothing wrong with it. Maybe you think that's the dumbest thing ever, but guess what? Maybe I think your thing is the dumbest thing ever about not having time stops. But does that mean that we're both wrong? Does that mean that we're both right? No. Welcome to the wonderful world of personal risk tolerance and finding the groove that best works for you. So it sounds like you and I, Mark, although I'm not a big options trader, as far as the time stop, we can both relate to, look, I'll give you some time to act like I want you to act and I think you should be acting, but I like the way you said, Mark, where if you're in it long enough, then, probably something's just not quite right, either with your analysis or something has changed where, you need to, just, end the trade or whatever. So I like the way you put that because, yeah, it reaches a point where it's like, all right, I'm out of here.
Well, and especially with options, trading as many options as I do, the longer you sit in them, the more that it's working against you. So I like it to work for me as
from the long side, that is.
You got it. Yeah, exactly. Which is primarily what I do. So I don't do anything fancy with options. It's really just going along on them. And so, yeah, time works against me. So if the longer I sit in it, the less likely it is it's going to come back to break even or make me money. I just cut my losses and get out if it hasn't hit my stop loss already. So I just go ahead and get out and keep my losses smaller.
Exactly. And I mean, that principle serves true for even if you're doing stocks. Sure, time doesn't exactly hurt you like it would in options, but it does hurt you in the sense of, the time value of money. Could you be putting that money someplace else where it would be working much quicker for you? And I'm not a trader that is trying to manage like 7 positions at once. I like to keep it very focused. So if my, capital is tied up in something, for me, it's always like, could I be putting my money, someplace else? Now that's a fine line because you don't want to cause that, to have you act too soon. But it's definitely a very valid point, like Mark was saying, especially when it comes to options, because, time is a fascinating thing in many different aspects of trading. But good discussion there. I don't even know how we got on this big old topic here of time, but good stuff here. So if we're going to be sitting next to you on your computer looking at your chart, what would we see? I mean, is it filled with tons of indicators, but what exactly are you using on your technical chart to help you trade?
Yeah, no problem. I try to keep it as simple as possible. So I trade with the 10, the 50, and the 200 SMA, and I like the Bollinger Bands. Then I also have RSI, MACD, MFI, and volume. That's about the only things I really keep on my chart.
Keeping it pretty simple. You like the price action, and more indicators is not always better. Analysis by paralysis by analysis is definitely something that you can kind of do to yourself. But what would you say are your favorite setups and strategies? What are you looking for actually in these trades to spot them?
Yeah, no problem. So honestly, I kind of just go for the main hitters anymore. And what I mean by that, if a stock's going up and but it has been trading under like the 50 and the 200, if it's going up and it's relatively going to hit the 50 or the 200 fairly quickly, I'll play that bounce all day long. So whether it's going up and going to hit it or going down and going to hit it, I like to play those type of setups. I like the fades. However, I'm perfecting it still. I found that I at least when I first started doing it, I'm far too early to the party. And what I mean by that is like I'll be getting in thinking, oh yeah, it's going to start fading from here, and then it proceeds to go up by like another $1, and then
yeah,
then
you're
starts to
getting
go
a little
down.
too aggressive then, if that's the case.
Right.
Yes.
And that's a problem because when I started doing those, it was usually on the fast movers. So like it would literally shoot up in a dollar in like 2 minutes, and like before I even had a chance to trigger my set up my stop loss. Now I've now since I've remedied that problem, I submit the stop loss in the order all at the same time. But yeah, I mean it would go against me like right away, and I'm just like, God, I know this is going to fade, but then I mentally have a stop loss. So when it does do that and goes up on me like that, I do go ahead and get out and take the loss, unfortunately, because half the time they end up coming back around. But this is greed, so I'm still doing the logical thing. But half the time they end up coming back down and going with my original idea, where they were going to fade, and they end up coming back down to where I would at least broke even, or maybe even made a little bit of money. But yeah, I'm definitely jumping in too early on the fades.
Yeah, I 100% agree with your self-diagnosis there on the strategy. Because, yeah, if you're getting in too early and those things are at least coming down to break even, then, yeah, if you would have just waited a tad bit longer, then you would have had plenty of wiggle room to work with and make the trade work. In terms of you've kind of covered some of this, but what are some things that you would say you do very well? So some of your strengths, and then what are some things that you kind of realize, again, on the topic of being self-aware, that you probably still need to work on? So I guess let's start off with what you still need to work on, and then we'll bring your ego back up and your confidence back up with some things that you think you're doing pretty well.
Okay. Yeah, sure. Some of the things that I definitely need to work on still, because don't let me fool you. Like, I've been doing good here recently, but I still struggle every trade with the voices of trying to be greedy, and especially if something's going against me, just like, go ahead and cancel that stop loss, and it just average down, it'll go back around. I still struggle with that every single trade. But I've been much more disciplined about it. Now it still does affect me from time to time. Like if I'm at work and I just quickly enter into a trade before I put a stop loss up or whatever, and it goes against me like really quick, like Tesla, like that thing can move really fast. So say I just entered into a put, but all of a sudden it goes up, and now all of a sudden it just went $200 against me. Well, I'm like, that I'm not selling. I'm going to hold on to it, and it'll come back around, and I can make $200. So I still struggle with that. I'm not nearly as bad as I used to be, but that's definitely something that's still a work in progress, and I struggle with all the time.
Now, you're not as bad as you used to be, so that means you're starting to come up with some solutions to kick those voices to the curbs. What are the tricks that you've been doing? If you've been getting better, sure, you still have work to do, but share with, because this is always a thing. What are some tips and tricks that you're playing on yourself or whatever that's helping that get better and better?
So one of the things, honestly, is just, thinking about how much, think back to all the money that I lost, a year ago or so. And the other trick is, like I said, I kind of remedy that with how I enter my orders. For the most part now, I would say 98% of the orders that I enter, it's the purchasing the underlying position and placing stop loss all in one. So it's not like I have to go and set it separately like I was doing. And honestly, once it's on there for me, once the stop loss is on the screen and it's already set, I seem to find it easier to be more concrete for me. So where I was doing the mental stop losses, I just kind of, like you say, Clay, all the time, I was playing that mental game with myself and just saying, it's all right, we just lower that stop loss by 5 cents or whatever. Whereas if I have it on the screen, I have it set, I find it easier to just obey my original plan.
That's good stuff. That makes perfect sense to just kind of, like I said, just puts it more so in concrete. What about some things that you are, that you feel confident in, that you think you're doing, pretty well for yourself? Yeah,
sure. I'll get to that in a minute, actually, if you don't mind. So one other thing that I know I'm really bad at too, that I'm struggling.
Geez, you really just want to beat yourself up there.
Yeah.
No, this is good. This is good. Go for it.
So really aggressive profit taking. So, and I don't know if part of this is just part of my job. So since I do know that I can leave my desk, fairly quickly for meetings or whatever. I don't let trades always play out. So when you do see the home run trades, or what I saw could have been a home run trade where I made $200, if I would have managed to trade correctly and walked my stop loss or whatever, I could have made $2,000 instead of $200. But instead, what goes in my head is I instantly start getting panic, like, oh my God, I'm going to lose this $200 because the very next candle is going to shoot right up against me, and it's going to be back at break even, and I won't have booked that $200 profit, and I'm going to be pissed off at myself. So I'm trying to get better at that.
And that's always the fine line that you're going to walk, because it definitely is a fine line between being greedy and then, just profit is profit. So
Right.
Obviously you understand kind of management techniques and how to, push your winners as far as you can, and that'll easily offset any of the small losers you do take because you're disciplined. But yeah, Mark, it's been an absolute pleasure talking to you.
We still got to let you. He's just been beating himself up.
He's got to
yeah,
do
sorry.
the good stuff too.
Yeah.
So come on, talk yourself up a little bit.
Exactly. Yeah, talk yourself up just a tad.
Yeah,
please.
sure. No, so some things I think I do really well is, identifying profit and taking it when I do before I let it turn on me. But more importantly, on the charts themselves, for all the robotic trading things that you teach, so just the basic shapes and kind of patterns to look for, I think I identify most of the basic ones really well. And I can identify those kind of pivot points in the breakouts and how to best play those, which is why I can get to an 88% win ratio. And why for the past, probably about 3.5 weeks now, I'd have to look, maybe in 4 weeks, I've not had a single red day. So,
don't look. You know what winning streaks are, but don't even look. Just
right.
knock that out of your mind. You don't need to focus on winning streaks or anything like. You know why I say that.
Yeah, for sure. So yeah, I think I do that stuff fairly well. It's just a matter of kind of perfecting, basically my internal voice and making sure I don't screw myself up.
Well, Mark, it's been an absolute pleasure speaking with you. It's obviously really cool to hear a story, not only that has kind of gone on for so many years, but just kind of your pretty much your journey through the market. Because, like you say, it's always different for everybody, but obviously you had some rough times, some great times, some rough times, but it sounds like you've really kind of found your niche. You found, what works for you and how to, really make it work long term. So first off, thank you for being a guest. Like Clay said earlier, though, it is completely underwhelming since we did meet in person and now we got to talk over this internet thing, but we'll probably see you at the next meetup maybe.
Yeah, for sure. I definitely plan to do the next one. When they're closer to home, it's a lot easier for sure. But I'm not expecting you guys to do another Columbus one. But no, my goal is to definitely come to another one.
Awesome. Well, Clay, it sounds like Mark's not going to shiv us at the next meetup, so that's a good thing. You can cross him off the list of potential assailants. But I do know the real reason you did come on the podcast today was to borrow my time machine. So if I was to lend that to you, you can go back to any time period you want. What's one piece of advice you would give yourself?
Oh, well, that's easy. Put every dime I could find into Sirius Satellite Radio when it was 5 cents.
Or just go back to when you were born. Yeah, I guess you could do that too.
But yeah, that's obviously that would be great. Clay, I know you were going to go like the Microsoft route or Google route or something, but in reality, I mean, it's all the same.
I'm going with the one I know. So, but yeah, absolutely.
You're such an IT guy, Mark. Mark is an IT guy. That's such a geeky answer to give. You know what the spirit of the question is. So tell me what in the spirit of the question. Don't play these little IT little games with me. I have to work with one every single day with Nate. So what would you actually give yourself? What piece of advice? Help the viewers out here.
That isn't a buy or sell recommendation.
We'll
make that clarification from now on.
Honestly, yeah, probably the best advice I could give somebody would be to paper trade for a lot longer. Paper trade, however long you think you need the paper trade for, multiply it by 3, and make sure
nice.
And trade with real sizes, like Ches said earlier in the interview. Just make sure you're not doing yourself a disservice and paper trade with real sizes. That way you can really perfect and know what your particular strategy is going to do for you.
See, Mark, that's why I had to press you, because that was actually really good. Paper trade for as long as you think you need to, and then multiply it by 3. I think that's really good.
That's perfect. That's a good formula. It's a good IT formula. He plugged into a program, and that's
see, that's the IT answer that I was looking for, not go back to some hypothetical place, because now that's actually good practical stuff. So maybe we'll call it the Mark III rule. Whatever you think you need to paper trade, multiply it by 3. That's some good stuff there. Now we get into the hard stuff. This was all just child's play. What is your favorite movie?
Oh, that is a hard one. But honestly, it's probably the trilogy of Back to the Future. Every time those are on TV or anytime I get a chance to watch them, they still thoroughly entertain me, even though I've seen each one probably 20 times.
I do enjoy that, and I have actually just watched it, and I think 2 months ago I went through all of them again just to relive the memories of my childhood. But what would you say is your favorite meal and dessert?
Dessert, it's got to be ice cream, hands down. I love ice cream.
What kind?
Well, so I'm actually a big cookies and cream fan.
That's America. You can't go wrong with cookies and cream.
Well, my weight it shows it. So, yeah, and then meal actually is a pasta. It's something my mom used to make. I don't even really know what the name of it is, but yeah, it's really good. I make it for myself every so often, and that's probably my favorite meal. But it's essentially just a traditional Italian kind of casserole / pasta, kind of all mixed together.
Nice. That sounds good. What about hobbies? What do you like to do outside of the markets?
Yeah. So obviously you kind of already hit it. I'm definitely into IT. That was my career. It is not anymore. But it's still a big hobby. I used to be a big time gamer. Gaming as I get older here definitely has been falling by the wayside. And as far as just kind of fun hobbies, enjoy actually, and I swear she's not in the room with me, but I actually enjoy taking walks and bike rides and stuff with my fiance.
Well, I would hope that would be the case, because if it's not, then
Mark knows she's going to re-listen to this, so he's getting the brownie points now during the wedding planning.
No, probably not.
He's getting the cookies and cream points. There you go.
Yeah, there we go. Perfectly.
I keep telling her to just set everything up and let me know when to show up, but she doesn't seem to like that.
Yeah, they usually don't. I was in the same boat. But anyways, moving on. What are 3 words you believe are associated with successful trading?
Clay, trader. Oh man, .com would be 4. That sucks. No, I'm just kidding.
No, you're not supposed to. You're supposed to say that was actually it. No, that would have been clever, but yeah.
Clay trader rules.
Yeah, there you go. No, I would say just discipline, homework, and just your own psychology. So psychology.
I'm going to change it. Discipline, homework, Mark III, since that is now a terminology and the rule. Mark III.
Yeah, I really hope that does not catch on.
No, I'm gonna force this round peg through a square hole for as long as it takes, but it's gonna happen. But hyprsnpr, funny story there. Forever I'd look at his name in the chat room and be like, "What? Hi, why you?" I never knew what it said, and then when we met in person, I just confronted him about it. And he was like, "Hypersniper." I'm like, oh wait, that makes sense. Now he doesn't spell it out, hypersniper, but he abbreviates it all. So I'm glad I finally understand what your name is saying, and that comes from your gaming days, if I remember right.
It does. So the reason it is spelled the way that it is, the actual spelled correctly, hypersniper, was taken. So I had to come up with a clever way to spell it, but it was my Xbox gamer tag, and it just kind of translated over into claytrader.com as well.
Now that's like I said, I just know hypersniper. I even have it where I know your full name and your screen. I don't know how that works. I guess maybe because you've been around a while. But yeah, I think it's been so mind-boggling to me that I've just learned your real name too, because I can't even. Yeah, but I'm glad that I finally understand it and can comprehend it. I can die a happy man now. So because that used to just confuse me to the ends of the earth. But in all seriousness, thank you for hanging out. Would you ever come back and do this again?
Yeah, this wasn't so bad. I know you guys had to ask me a couple times to do this. I'm sorry for holding out on you so long. I'm just not usually the type of person that'll come on and do something like this. But yeah, it wasn't bad at all. So I would definitely do it again. Okay,
and I appreciate that feedback. So for you listeners out there that are members and that we've tried before, like you said, it was it, dare I say, maybe a little fun, or was it just not so bad?
Yeah, it was fun. Honestly, I just didn't think my story was all that great, and figured like
you didn't think that your margin story was that great.
No, not really.
Oh my! All right, I'm about to just these IT guys. You love them, but sometimes they just make your what do you
drive
thinking?
You nuts.
And they just drive you nuts. It's like technology is a great thing, but it can also be a not so great thing. But anyways, Mark, thank you for hanging out. We will certainly have you back again. And it sounds like we will see you at the next meetup, whenever that is. So thanks again for hanging out with us.
Yeah, thank you guys. I appreciate it.
For you listeners out there, a final few things before we go. First, if you're listening on the website itself, click that share button, leave us a comment down below. We will read those and reply. If you're listening on YouTube, be sure to check out the remainder of the channel. Lots of other stuff out there that hopefully will lead you to subscribe to the channel. And then finally, if you're listening on iTunes or any of the other podcast players, be sure to subscribe. And definitely on iTunes, if you could leave us a rating, that would help us out quite a bit. So something as simple as that really does help out the channel and the podcast itself. So any of those things would certainly be appreciated. So thank you again to you as listeners. Thank you again to Mark. Thank you again to our esteemed co-host, Ches. We will see you all back next week.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.